All right, welcome to variation number 6 when we talk about double bottom setup. All right, so by now you should be getting becoming very consistent with yourself in regarding to what the market is giving you, how it's giving you that setup, and you will notice that it's pretty much technically the same thing. It's just sometimes it might be a bit higher, sometimes it might be a bit lower. Now for number 6, we do get our double bottoms, but when the market gave us the double bottom, it didn't just simply buy up. Instead, it sat there. What I mean by that, it range, okay? Or it consolidated, right? First bottom, market went up. You generate a zone. When the market came back to the zone, right? Boom, like so. That's one. And that's number 2. Okay. When market came to the zone, it could have given you your bullish engulfing here, and then it went up and then come back down, right? But it's just sitting there. Sometimes it does that before it goes up because it's either waiting for a news play or it's a holiday. If Christmas is coming, right? It's not that the setup is not valid. It's that it's just waiting for Christmas Day to be over, right? That way it could go ahead and start doing what it's doing, or Thanksgiving or New Year's or whatever the holiday may be, where the market's not closed, but it's slow, where most people are off. There's not a lot of volatility in the market. So, and again, it's not always going to be because of a holiday. Sometimes it's just sitting there because they are waiting for a California wildfire, airport shut down. That's where news come in. You already have the setup, but you just sit there until a news come out, something crazy happens. Like, but yeah, this is again variation number 6, right? So again, it's the same concept, just like all the other one. It's just a lot of time it presents itself in different format, right? So first bottom, it stops and it went up. Cool, clean, very simple. Once it comes back, it didn't buy up right off the bat. Instead, it consolidated, okay, and then eventually to go about its way. Okay. Now, as far as like when it does go, sometimes, it may go down first and then go up. It doesn't mean the setup is not valid. Okay. That's just normally what it does before it goes up. So that's why I am teaching you guys all the different variations of the setup. That way you're not afraid, you're not freaking out about anything or confused. Like, wait, why is it just sitting there for hours or days? Which is okay. The setup is the setup. Our sole purpose is to simply to take the trade for what it is. Okay. Once we take it, we put a stop loss where it needs to be. In the case of a buying setup, we place it at the last low, right? Far away enough where if the market was to go all the way down there to wake you out, it will become a whole different setup again, which for you to take. All right. And not only just that, before it would hit your stop loss, it will give you a price action that indicate it's going to continue down, where you could cut your losses short and then take the sell for the continuation. Easy work. Where your stop losses rarely get hit. Like rarely get hit. Okay. Um, let's go ahead. I have another one just so I can show it to you in more detail. There it goes. I got 2 of them in there, okay, just so you can see it better. So let's put the most common one up first, right? So just like before, you see we have a market that's giving us our downtrend, right? We get our lower lows and then our lower highs, lower lows, and then lower highs, right? Lower lows, lower highs, right? I know based on how the curriculum is based, you may not know structure yet, but it's okay. All right. There's a reason why I'm teaching you it the way I'm teaching you it. Okay. And then stops here, went up. Okay. And then here we got highs. That's higher than the previous one. So we got higher highs. Okay. And then high lows. Okay. Now you see when the market come back down to the same zone, you see it just sat there. It breaked out, right? It sat there. for, how many hours, or sometimes it could sit there for like 2 days, or it could sit there for 8 hours or 12 hours. Okay. Sometimes I see market sits there for 3 days, and then at the end of the week, and then it shoots up or goes about the way that it was going to go. Okay. So it sat there, consolidate. Please, again, I want to make sure we clear on this also. We take our trade based off the higher time frame. Again, monthly, weekly, and daily. So what I'm saying is, when somebody asks you, or when you ask yourself, what time frame do you trade? You will tell yourself, or tell them that you trade the monthly, weekly, or daily. That's the time frame your technical analysis is coming from. Now, if they ask you, what time frame do you use to enter the trade, to execute, then we'll talk about, we use the 4 hour time frame, because we trade the bullish engulfing, or the 4 hour bullish engulfing, to be more specific, right? And of course, if you take the daily like I do, well, we keep our trade on a daily time frame. That's the lowest time frame. So we trade the monthly, weekly, daily time frame, and we execute in the daily time frame itself. All right, same concept, and we will take our bullish engulfing or bearish engulfing depending on the setup. Now, in the case of this, is we're talking about buy setups when it comes to variations of double bottoms, right? This right here would be a bullish engulfing. That's what we will be looking for. All right, either any one of the 5 to 6 variations of it, right? So, sometimes you'll get bullish, bearish, bullish, bearish, bullish, bearish, bullish, bearish before the market shoots up. Okay, but sometime a range. My bad. I'm sorry. Sometimes it consolidate. I'm sorry. It consolidate. All right. So either if you choose to do this concept on your textbook, or your sketchbook, or your composition notebook, as far as your flashcard, again, I need you to provide all the information that I need to know about it. And I need to know everything that you know about it, you understand. As far as one, this technical analysis was based off the higher time frame, monthly, weekly, daily. We using the 4 hour to pull the trigger. That's the time frame we're gonna wait to take our price action, and our price action will be the engulfing bar, right? In the case of this, it will be the bullish engulfing bar in any one of the sixes, right? And of course, these price action will be available between 1, 5, or 9, depending on where you at. Okay, or it will be 8, 12. Wait. I forgot. I had to draw number 2. Oh yeah, 4, 4, 8, 12, right? 4, 8, 12, 4, 8, 12. Okay. Or 12, 4, 8, one of those. All right. So it's in between, right? 4 hour increment. Okay. Depending on where you at. Again, you'll write down everything that I need to know, which is everything that you know and understand about this. Give me all the information that you can give me about that. The more detail you apply into your work, the better it's going to be for you. So again, please don't be in a hurry just to draw this out and then just turn it in. That's not how that works. Take the time. This is your art and craft. This is your work. All right. This is going to be your own book that you will basically be putting together by yourself. All right. Um, if you do have this, it will give you some examples. I know you have the ultimate price action. It does have the setups, of course, in there for you. The different variation, equal lows, where one low is a bit lower, or where the next high is higher than the next one, so on and so forth. Okay. Um, with that being said, let's go ahead and end this one with this. But again, let me go ahead and pull the other one again right here. Sometimes that's how it might looks like when it comes to the consolidation itself. Please understand, the highs and the lows are about equal. Okay. All right. You see that it comes here, hit more than once, and then it went up, and then it come back to it. So again, same zone. That's just how it present itself. Okay. So if you choose to draw out this one, all right, I am a-okay with that. If you do both, it will be amazing. If you do both of them, simply, I mean, you're just a great student. Like, you love the work. You giving it everything that you got when it comes to excelling, right? So you put in the time in to show yourself both variation of how the market can present itself. Okay, so that will be the past, and then that will be the present time. All right, and if you remember how I said, right, when it comes to trading it, right, when market comes to the zone itself, let's go back, okay? When the market comes to the zone itself,